JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Trader's Tea Time with me, Darius Anucauskas. Today is the 4th of March 2020, so yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump in, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. And yep, I believe you can find a lot of useful stuff here on jfdbank.com, and if you click on the research tab right there. Now then, let's jump into the charts. Now the first one I want to touch on here is the German DAX. Now I talked about this one this morning, and basically what I was telling you guys to keep a close eye on this 12,200 territory. As you can see, it continues to hold, so the index is testing this one once again, but it still is it's still trying to kind of overcome this barrier. For now it's unsuccessfully. We'll continue observing this one, and in a way, if this continues to hold, then well, I mean, we're still sticking to the same idea where we could see another round of selling here. But of course, if it starts pushing above the 12,200 zone, then keep your eyes on the 12,000 this 400 territory, roughly below that, just roughly around there. Yep, for us to consider the upside, or at least slightly higher levels, ideally we would like to see a push back above the 12,600 territory here. But for now, it is where it is. It is at closer at the 12,200 zone. This is the barrier that we're keeping a close eye on, because if it continues to hold, this could lead to a bit of selling here. Of course, don't get me wrong, looking at our oscillators here on the 4-hour chart, we are seeing a bit of an upside here, a bit of increase in the buying momentum, in the upside momentum here, but still, don't get me wrong, this could easily reverse back down. So that's why we're not really focusing too much on our oscillators here. We're just keeping an eye on them, but mainly we're focusing on some support and resistance levels. And in this case, the 12,200 level, that's what we're keeping an eye on. S&P 500. Now, looking at this picture here, I've talked about the S&P recently, but basically what I was telling you guys to keep a close eye on this 50% on the Fibonacci retracement, and as you can see, we managed to test that and quickly reversed back down. So also what I've mentioned was that to keep an eye on the 3,154 zone, which almost got tested, but it worked out nicely here. We saw this one reversing back to the downside. Yesterday it sold off, and yesterday it closed in the red, and yep, in a way, this doesn't look very good here for this index. However, let me just get rid of this Fibonacci here, and let me just quickly take a look at the cash index. And basically, the price of the cash index is currently balancing around the 3,060 territory. So it's basically back here, and in a way, we'll have a nice opening gap here to the upside. The idea remains the same. We will continue monitoring this territory here around the 3,154-55 zone, and of course we will keep an eye on the 200 EMA here on the 4-hour chart. Now, another thing that you could keep an eye on, and let me just put this one on the chart very quickly. And of course, this is this little kind of, well, I wouldn't say even actually a little, but nevertheless a a tentative, but a long-term tentative upside support line taken from the low of December 2018. So as you can see, yesterday the index did test this line from underneath, and then reversed kind of back down and continued to trade lower. But as I said, today the price right now is currently balancing around the 3060 territory. So in a way, if it travels higher but again fails to push back above this upside line, then well, I mean, this is not looking good for the indices. But if we do get a nice good push above it, and we also get a push above the 200 EMA here on the 4-hour chart, then well, this is maybe something that the bulls could consider. And but for now, it's more of a bear market here. But let's keep an eye on some of these levels, guys. For now, yes, we may see a bit of a climb higher, but keep your eyes on this this upside support line, and if it continues to hold, then if it continues to hold, if the price is not able to surpass it, then well, I mean, this is not looking good for the buyers. DXY, another index, but this time is a dollar index. I've talked about this one this morning, so just a quick update on this. As you can see, the price is pushing back above this 97.35 level. I talked about this one. This is basically the low of the 31st of January, and the price is trying to make its way higher. It could still do that. It could continue pushing a little bit further north, but as you can see, we do have this downside resistance line taken from the high of the 21st of February. So around there, 21st of February. So this downside line could continue providing kind of resistance for the price here. So in a way, what you could do here is keep your eyes, of course, on the 21 EMA here, and also keep your eyes on the on this little area right here, this little resistance barrier around the 97.70, which is the high of the 3rd of March. In other words, the highest point of yesterday. So in a way, if we get a push above this barrier, this would also place the price above the 21 EMA here on the 4-hour chart. And yep, of course, yes, we will consider some higher levels, but again, as I said, this downside line, if it remains intact, overall trend is still to the downside. Gold, very quickly on this. So I talked about this one this morning, and this is exactly what I was talking about. Basically, I was telling you guys to keep a close eye on this downside resistance line taken from the high of the 24th of February, and as you can see, this downside line acted as a good area of support. It tested this line from above and rebounded, and it's now kind of trying to make its way higher. The only thing is, what I was also mentioning, that for those who are more on the cautious side, you could just wait for a break above this 1652 territory and then target the upside, because this would confirm a forthcoming higher high, and yep, we could aim for these February highs. For now, we're kind of being very careful, although we are more on the positive side, because on the other hand as well, if you can also see that we are forming somewhat of a bullish flag pattern here. So we do have our nice pole, so in a way this could play out as a nice bullish flag, but just for that extra confirmation, a push above the 1652 level would be needed. In terms of the downside, we'll examine the lower levels if we get a drop below the 1612 territory. So guys, for now, keep your eyes on this one. Ethereum now, haven't looked at this one for quite a while. So as you can see, after we had a nice rally here to the upside, where we managed to test in February, we managed to test the 289 territory, the crypto reversed and drifted lower, and currently right now it's kind of moving around the 200 EMA here on the 4-hour chart. So in other words, it's kind of actually also kind of ranging here a little bit, or it's currently in the consolidation mode. So for now, we will keep an eye on these two levels because this is the low of the 26th of February, or in other words, is it the lowest point? No, that's not the lowest point, because the lowest point of February is around here somewhere, guys. So we're still not there yet. So in a way, the low of the 26th of February could be a nice area to monitor, because in a way, for now, you can see that the crypto is kind of ranging, but at the same time, we can also see that it could be actually coiling up as well, so it could be getting into a little squeeze. So for now, you could, like I said, keep an eye on this one. Let me just put this on the chart very quickly. There we go. So for now, you could keep an eye on these two lines on this. We could try to call it a wedge here, but it's not an ideal one yet. So that's why we're gonna just monitor these two lines, and we're gonna refer to them as these two upside and a downside line. But ideally, what I was saying previously, that ideally we would like to see a push through one of these levels, the 238 zone here on the upside, or the 238 on the upside, 208 on the downside, because a drop below the 208 zone here would confirm a forthcoming lower low, and yep, it could open the path towards that lowest point of February. And let me just quickly capture that one. So it's around here, basically the 179 zone. That's the it's around that lowest point of February. So yep, a nice good drop below the 208 level would confirm a forthcoming lower low and open the path towards that 179 level. In terms of the upside, we need to see a push above the 238 zone here, this barrier, before considering slightly higher levels again, because at the same time the price would be back above the 100 EMA here on the 4-hour chart. This line shown as the green, shown in green color, and a nice good push above the 238 barrier could in a way open the path towards higher levels again. But again, for now, let's not over speculate on this one too much. First, let's wait for that break. USDJPY. Now, with this one here, after it kind of slid all the way below the 108.26 zone, which was the lowest point of February, it kind of continued drifting further south. Oh, and I do apologize, that was not the lowest point of February. The lowest point of February was around here still. So basically, that's the this is the lowest point of February. Let me just quickly mark that on our charts. There we go. So this is 107.48 zone. That's the lowest point of February, and basically, as you can see, today the rate did try to climb above it, but it continues to struggle with it, basically. So in a way, what you could do here is keep an eye on this one. If we get a nice push above it, then yep, we'll aim for slightly higher levels again. The only problem here is, of course, with this short-term tentative downside resistance line. And let me just drag this one very quickly here. So that's the little kind of issue here with the upside. So in a way, for us to consider some higher levels, ideally we would like to see a push above this barrier right here, above the 108.58 zone, and only then we will aim for slightly higher levels. For now, any kind of move higher up until this downside line could be seen as a temporary correction before another leg of selling. For those who are more on the cautious side, what you could do here is just wait for a drop below the 106.82 zone, because this way, that's the current low, or in other words, the current lowest point of this week and the current lowest point of March as well. So if we get a drop below the 106.82 zone, then yes, this would confirm a forthcoming lower low, and we could start aiming for much lower areas. And by much lower areas, the first good potential area of support to consider could be here around the lowest point of October 2019, and that's around the 106.47. So keep your eyes on that one, guys. EURGBP, very quickly on this. I talked about this one recently, and I was telling you guys to keep a close eye on this barrier here, the high of the 25th of December 2019. So this area around the 0.8727, as you can see, it continues to hold. It we do get these overshoots, but neither of the 4-hour candles are able to close above it. So we did get that correction, but what I was also saying recently, keep your eyes on the 0.8651 zone, because if this area provides decent support, we could see a nice rebound and a push back to the upside. But if it fails and we see the rate falling below the 0.8593 territory here, well, I mean, this is where we could consider a deeper correction to the downside, because still anything up above this upside support line taken from the low of the 18th of February still could be seen as a temporary correction before another leg of buying. So that's why for now, let's keep it short and simple. First, all eyes are on the 0.8651. If it holds, we could see a nice rebound, but if it fails, then yep, keep your eyes on the 0.8593, because if that gets broken, then yep, it could lead towards lower levels. And finally, EURUSD here. Now, this one is sliding lower again. This is what I was talking about this morning, because basically if this barrier here, the 1.1095 territory, continues to hold, we could see another round of buying here. But if it fails, well, I mean, this could open the path towards a deeper correction to the downside. We will then aim for the 1.1036, or even all the way here towards this upside support line taken from the low of the 20th of February. So something to keep an eye on, guys. Very interesting target, very interesting level here. Like I said, if we see a nice good drop, and maybe if we see ideally if we see a daily close here below this level, then yep, we would like to consider further declines. But again, for now, we cannot really talk about anything yet until we get that close. You could start off with the 4-hour candle close. If we do get a 4-hour candle close below this, then yep, there could be a possibility for this one to drift lower. We would see the rate already trading below the 21 EMA here on the 4-hour chart. So in a way, kind of maybe more bears could be joining in and sending this one lower. For now, as I said, all eyes are on the 1.1095 zone. If we get a nice rebound, yep, then keep an eye on the on these recent highs. But like I said, we'll get to that later. Right, guys. Okay, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, I hope you have a beautiful, beautiful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.